Dun, 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 dun. Dun, dun, dun. Hey guys, morning. Couple of things I was taking care of the personal side this morning. Try to jump in the chat a little bit. Alright, so let's go through what we did overnight. We got stopped out on the 25s, 23 cells. Let's see if I still have this pick. Got in on the 36 overnight. Got out of this primary both on both sides. This was the buy where we took 58, 50 or something like that last night. These both cells. I don't have the pick for that. Right. This is the deviation cell we got in last night. Where's my pick? I try to always keep that online. You'll see what this number came from. We use the 36 as our backup. That was based on deviation, which is that yesterday's close deviation level. We were looking at the O3. Just probably didn't talk about the 36 on the plan because there isn't particularly part of the plan. We were looking for a further continuation dip. The 36 activated and got in. We need to make some adjustments and use 6 and 10 as our TPs for two contracts. You can see this morning we got filled on the 6. I actually took profit this morning, early this morning on the 6, and just waited for the retest to get out of the secondary, which was supposed to be our TP at 10. You can see the strong open this morning in the market, and on oil we got crushed. Just literally crushed. We tried to buy 58 30 last night. That failed. Got out at 2 size 30 points. First we took and we maxed out at 50 points. Size $500 loss on oil today. Don't know why I'm stop resetting. It keep just resetting for itself. So be careful now because we're seeing the 28 fill, which is the volume node right to the high side, completely filled, and you're seeing a break to the upside. You have to be very careful. You can do what I'm doing personally is selling us a 2 contract back here because my risk profile allows it at 36. Looking for the failure and adjusting TP to 30. On oil is on that waterfall we've looked at this morning. We are looking at the 42 to 50 for support. Didn't hold, continue to the downside. Right now we are 2% down in the market. You can see where we got the kickoff. We were looking for the buy of the value low. Did not happen. We didn't get retest to the upside this morning. We were looking to sell through on if the upside came off this morning. Look for the continuation. Sell, didn't come off. Came back up, hit value low, and just fell off straight off from the market open. This is trying to catch a falling knife. Highly unadvisable. So we wouldn't be trading oil again for today, no matter what we see, because we had max loss on oil, which is $500 or 2 different positions. We consider that as how we looked say as we looked trade. You can see what we were looking at in the value volume here on how we'll be looking at. You can see right there the value. They're just looking for value there, just didn't reach back to come to the downside. We were looking for that 30 to push for the downside on the overnights, the downside, and chose to use the 57.50 as the support area, because we had 60 to 50, 60 to 40, we used 50, which was the midpoint for the area for support. If it was going to hold, did not work at all, took our loss, got canned, as we say. Looking to see if we get filled on 36. If we do get it filled by 10 a.m., maybe a good trade, because the way that popped, that is a strong push to the upside. Is according to how we looking to fill out the arm. To fill the profile, so the profile went up on low volume. Right, let's see if we could show this from last night. So this was yesterday's close. So this was the open here. So what we'll be looking for. So that was what I was asking for. You can see this one bar, this 1 5-minute bar just pushed to the upside right at that is 59.50 Eastern time. So still trying to figure out what the hell that was. Don't know what it was, but it came up to the level on the secondary side after breaking our 30 push straight up to 36. Didn't quite fade it at the first push, which is the rule we supposed to follow for oil, wait for the retracement, and then got filled, then made our adjustment as required. So what we're looking for is a retest of the high, which is our deviation level, our single deviation. If it does kick above, we know we're using 6 points today as our stop. You could use up to 5 points as your stop if you want to risk it. You're using lower risk parameters because we had all-time highs and you're trying to sell all-time highs here. So it's according to how we fill out the the trade. Let me see if I have long-term data for the oil here. Bam, 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 bam. Yesterday Tesla had a good pop, so oopsie, look again. Just printing money. I forget what day I bought it. Well, I added my last 7 on 98. Bring up the chart. It was a simple buy. I just bought 7 to get that off. You can see it right there. The technical chart. Yes, it was an easy buy. Not much. Looking at 5 million contracts. News on Tesla was somebody else, one of the next analysts. Now get a clue and raise the price to 800. So some of the short guys would get their pants shorted off for them. Haha. Like it, you know. I'd hold on a second. Yeah, some personal stuff. Need to go and check a couple of these guys out today. Alright, so that was the level we was looking at. Tesla doing pretty well. I'm gonna make sure that if it on Forex, probably might be on Forex Factory, some brilliant guy, just get closed like about 6 months too late. Yes. That would be up with these BOC, these Canadian news today. Don't have any oil news, so that is what surprised me. This, if a shade USD card, should be at high volatility right now, so be very careful of what you trade. And you can see exactly where the kick come from yesterday's to overnight trade. You consider up to London Open overnight. You can see why the magnet come back there, and you can see the initial kick right there. The breakout point. Yeah, that push to the upside, so yeah, at high risk right there. See, this is high risk to be on the short side. Like you already fully low volume node bar. That is the real kick we came off. Yeah. If you was a buyer, I was looking for 28 to 30 as you buy, and look to just skim 66 points off the market. You see what participation looking like. Right, something happened there, so I can see that. You can see you had 2% move. You only had 400,000 so far. That's a little bit low for that sort of move. Today is Wednesday. Don't know. Da-dum. You see oil just died. Oh, I need to find oil data. Oh god, my long-term oil data. Ooh, so lovely, so lovely. Bang. Right, long-term oil, back to what the subsidy actually doing today. What is the actual quote, right? Trying to find an area of support. I think our last main area of support, we had short options running for the next 30 days, so 1 hour. You see our important level broke here. That was the 50 to 60 area right there. That was the important break. That was a 50% move. What you could do is calculate an equal measure move extension, because we opened with a gap. For your next buying area, open with the gap, 50% move. You're looking for equal measure move or 141 extension. You're looking at technical points and you're swing trading it. Oops, let me just make this a lot bigger. don't we want to snap on? Use your fibs. No, this is not taking into account liquidity and how much liquidity there is in the market. We don't need this. We need this. Don't need that. Don't need that. Extend lines. Percentage. Background feed. Right. 56.92. Locate possible node right there. That was a big kick point. Right. Make sure I can snap this up. 92 to 86. Right. Bam bam. Right. We're gonna place 2 working orders here. That is 90, 50. Bam bam bam. 53. Right. The extension will come at 3%. Locate. Save that as /CL. Right. My kill zone is built here. Alright, so we're looking at 87 to 92, which will give us average at 90. We'll take the average 90 entry with 2 contracts at my volatility would be 52. Yeah. So entry here would be at 56.90 by 2 contracts at 56.90. Stop loss at 58. Plus 32 is how much? 22. Holy shit. Let me just call this in. Oh lord. got that set up on my side. So using a 1-to-1 TP on one side, that is 32. That's the range, and we'll monitor if we get the bounce. Damn it. Yes, flip. Not a strong flip, so be very careful on what you're doing on the ES. Alright, you can see how we analyze this. Alright. You can see where the node is here. Right there, you're looking for that 89 to 90 node. Right there. Right here. Kill zone. You can see next logical location point stops on where our trade is located, where our stop's located, right down here. So you can afford it if you want to trade one single, trade one single. 57.20 is your area you want to close off your trade at if you do get filled. Tesla is up 5%. How to get on a trade? Whatever. I should finish up this. Alright, here's the danger. What trading here is danger here is you're trading against all-time highs, and you have a pretty much tight trading range with volume in it. So look at the overnights, including everything. You can see where the volume is. Volume just gets sucked out of the market overnight unless we see a return back to this downside. So what we do have is test of the high deviation level, looking for at least a return to 30, and then look for the push through into our area, looking for the low volume node at 27, 26, 27. Looking to be on the bearish side. If you want to be bullish from the area of 29, 28. This was the kickoff. 29 is the kickoff point. I wanted to be bullish over that. No issues with that on my end. I was looking at the 25s right here for this to continue to hold for it on the bear side. Good work. This is more or less a range trade we taken today. We actually got 1-2 off this morning, so not too bad. I'm not reflected on this. Don't know why the hell going gaga. Let's see if I could actually pause. Let's go. Somebody actually
early earnings are a hit. Happy days are here again. Let's take a look. Good morning, friends and traders. Welcome to the market forecast for Wednesday, January the 22nd. I'm John Hoagland. As always, thanks for trusting me with your time. We're going to get a comment from JD here during the forecast, as usual. And we're going to take a look at these charts in some sort of lens to see if we can put some sort of context over them to help us get in the right positions. Early eco numbers today. The 755 Redbook number was scheduled to come out yesterday, actually came out today, 9 o'clock Central Time. Existing home sales due out. As far as the news is concerned, U.S. equities have shrugged off the uncertainties that leaked into the market night before last, recovered small losses from yesterday, and are set to open at or near all-time highs again, bolstered perhaps by early earnings. Earnings this morning, we've already seen numbers coming out for Abbott Labs, Johnson & Johnson, and Northern Trust after the close. Raymond James Financial is due to come out, some of the bigger ones. The list is increasing day by day as the number of earnings that are going to be coming out as we start to get into the teeth of fourth quarter earnings from last year. Seems that trade is back in the news a little bit today. The president has been kind of pushing on Europe to start working on a new trade deal. And the U.S. dollar recovers the losses that it had early yesterday and is holding near monthly highs. That has some of our currencies looking a little bit weaker, testing some inflection levels that we're going to take a look at here very shortly. Make sure you like, share, comment, question, feedback, and heckling are always welcome. And don't forget to subscribe to our YouTube channel. You can get notified when we do go live. Welcome, Level 2. Good to see you, Don.
Overnight is remain the same, blah blah blah. Press conference will be going on 12:30 my time. Dun, 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 dun. The weather's on safe already, so this is what we're looking at. This getting really tight here. Now the logical play we would like to see is that retest of that 26. Would be buying off at that 26 with stops at 90 off the low. So this is where the build is at the moment here. Zone build should be here. This is your new kill zone. You see I swing high, swing low. Oops. Right. Make sure that that nodal high is right there. Right. See this volume right here. You want to see that 25, 26 area into the vacuum. Using here as protection, here's protection, and value here low as your low volume nodes. Just to get the exact timing on your trades. Come on. If you're fluent, what else will back to? Now this is where you could easily get sucked in trying to buy shit. Don't want to get sucked in buying shit. May look at London close to avoid getting sucked in to buy stuff. Have that set up on my lives already, so at 90. 18 minutes. So not too worried about that. Pintin money. Right, so that will mean slash NQ. I don't know what I'm here for. Triple W3 here. Doom doom doom. Chat for you guys because I don't normally trade it. And Qs or all the Qs. And the H contract. Oh, grandiose all time highs. You could see it didn't get the pullback. Yeah. Market is still running. We already have much opinion with tech because you can see all the volume trading right around this area here. That's one thing. If whenever you could get hashtag Delta on this. You need a futures platform. Yep. Nice bonds. So we know we have a kill zone right here between 95s to 80s. Well, the kill zone. If we located those. You want to be patient, you can be patient and wait for the bounce to come through, like hit the 80 bounce, then buy off the bounce if you're so inclined. But this fine also if we get the runner bounce, we know how to deal with it. We know here is our pivotal point, so like we in and out trade. Why is that 15 minutes will be on 5? Look at my delta indicators. Standard volume. Where is it? I gotta go now. Why is not yet? Oh. This bad. Yeah, but only that. Oh yes. No, you did I do your mother. Dum. Don't worry. We'll come down to that 80. You can see the volume built to the wrong side. All the up bars are just reaction bars. And as we were saying, this is what we're looking at here. Boom. Boom, 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 boom. Yeah, what about that? In the kill zone, we have a particular point. Why are you doing this thing? Therefore we have hard block on. Yeah, probably is that. See right, yeah, what we're looking for is the extension. Equal measured move, extension. I'm looking for the same type of reaction. Supposed to be close to fill this. You can pull the trigger there if you want. Oh, come on. Or whatever. We get too much in a bind for that. It should be filled in.
Order filled.
Right. Now you're looking for the reaction back to the upside from the 80. Low point, high point. Now this is where you could get run over like the dogs we are. All we use here is logic points to get into the market.
Order filled.
Filled on the buy side, on the sell side, on ES. Okay. Right. Let me just make sure and check if my stuff actually filled. Yep, my lives are filled. Live entries are filled also. Why is that what? 11 notifications for 2 fills. Bought 9 Ps. Looking for that lockout right there. We know where we stops are. We know where the kill zone is. This is the more risky trade in my opinion. Might work out, might not. Right, so we got filled. We didn't create a new high so far. If we do create a new high, maybe in trouble. It's on a 6-point stop, 6-point TP1, and then looking for that extension down to the downside. We've been trading very tight since the open. Tested the low, which is this node here. Let's see, node, which gives you some source for concern. And then you retest. The idea is to keep fading the deviation, try to avoid the breakout on the trade, so be very careful. And the trade in the oil, make sure you know exactly what you're in for. You're in for a ride. So once you break this point, then we'll know we have order flow against us, so we know we could actually pull the contract. Either one of the contract or both of the contract. Don't know what created this sort of volume, or the volume 240. That's not a lot of volume. Why would you have that amount of volume? Kinda weird. Looking at, yeah, I should to have market profile, so just gapped. Did we gap? Crest over, nope. CPI. Martin should be providing that amount. Right. what the ETR is for this. Am I catching up on that gap right there is my worry, my big worry right now. Because it might be hunting me to that level we was talking about. So what we would do is trade in and out of that 90. Look for break even right there. But less waiting on it and roll just to make a single 1-to-1. Don't like that break through the level over here, so we just gonna look to break even the primary. Because it just went below this trade. This extra 5 ticks all I'm looking for is a return. This gap is somebody interfering in the market in a big way, or there's some hidden volume somewhere in the market that I am not seeing. I don't think I am seeing it either, but I can show you my bookmark. Not seeing liquidity over there. Was seeing a lot of liquidity sitting here at the 85 and 90 level, so I'm just gonna close off that one contract here. Once you get the return to fill that gap, that is the gap we're talking about there, 90 to 91. We always take one tick in front of the entry, try to reduce our risk on the trade. Post that up for those guys. Yeah, I have more video to play. Oops,
a little bit weaker, testing some inflection levels that we're going to take a look at here very shortly. Make sure you like, share, comment, question, feedback, and heckling are always welcome. And don't forget to subscribe to our YouTube channel. You can get notified when we do go live. Welcome, Level 2. Good to see you. Dante, good morning. And Jim, good morning. Okay, let's go ahead and take a look, dive into these charts. Crude oil continues to try and push lower for the last couple of weeks after we put in that high above 64 bucks. Looking at the volume, we had a pretty good increase in volume yesterday, as the rollover is certainly over by now. Open interest on this down day, not all that conclusive, as money starting to leave at lower prices. We lost 1,700. Now that includes Monday and Tuesday's activity. Monday, I'm sure we did not do too much as far as changing open interest, so I'm looking at our open interest numbers today as largely just due to yesterday. So perhaps a little bit of short covering for yesterday, very possible. And here we are, we're pressing back near our swing lows. The swing low from last week here was 57.42. This swing low from back here in the beginning of December, 57.36. We're getting to kind of an interesting area to look for a possible execution. There's a lot of previous congestion at this level. We do have a couple of swing lows, so I'll be looking at opportunities there. The market, crude oil, that is, just opening. We've opened with a gap. I'm going to kind of step out on a limb here and say our opening range looks like it's probably the high of the session so far. Opening with a gap, driving in the direction of the gap. We might look to have the opportunity pretty soon here to see this opportunity down here at 57.40, 57.30 area. Now, that said, settlement is up here, 58.38. Put that on your chart. We can see it's our overnight high, 58.38 right there. We've been accumulating shorts and short time frame all night long. We're starting to get a little bit of a push to the downside, but we need if we are short, we're going to need help from regular trading hour traders, from bigger, stronger traders. If they don't show up, we may find an opportunity for to buy a weakness down here to see this market move back towards settlement. It happened yesterday. Here we opened yesterday. Here was the previous settlement. We got a little bit too short overnight. We moved the market back to settlement. Is that possible today? Anything is. If we can't close the gap relatively early, that's going to probably create more downside opportunity. It may bring in more sellers. Once in a while, you'll see sellers bring in more sellers. At least initially, our opening range is the high of the session. And not looking for longs pretty much when that happens. Might look for an opportunity again down here at 57.40 to 57.30. We may return back to this chart near the end of the forecast to see what has transpired over the next few minutes here in that crude oil market. I love the fact that we're doing the forecast at 8 o'clock so we can catch that crude opening and see if we can find some decent opportunities there. Here's the S&Ps, the little market that could. Traders have short-term memories. Good boost in open interest yesterday and the day before, of course. Remember that the open interest numbers do include from Sunday night, but their preliminary number says we added 23,000 contracts yesterday on a bit of a down day, a little bit higher volume, but that tends to happen on down days. We're still bringing in money in upside structure in the longer time frame is kind of the point of that. There are still uncertainties out there. Now European trade seems to be coming up in the news a little bit more and more. Of course, impeachment, who knows what's going to happen there. But again, traders have short memories. We're focused more, it seems, now on the decent earnings that have been coming out. So I don't want to fight this. Well, let's take a look at the 30. Okay, settlement is down here. 33.1950 is the settlement price. Make sure you put that on your charts if it doesn't populate already. Looks like we're going to be opening with a slight gap. We've got plenty of time before the open to see how we're going to create the early opportunities this morning. Opening with a gap, if we can't close the gap, we may look for opportunities in the direction of the gap, which would have us continuing to push higher and higher. We do have some pretty considerable overnight longs in this market. These overnight longs are shorter term, weaker money. They're not going to be probably taking those positions home after the close of the market today, and certainly not over the weekend. So if we're starting to accumulate some longs in short time frame, that again can bring the opportunity for us to look to buy weakness. We talked about that yesterday. Here's our activity from yesterday. We had a settlement down here. We had a lot of shorts in the market last night. Well, this actually turned into an opportunity to look for longs even in the U.S. Open, the U.S. regular trading hour open, to bring that market back to settlement. We're going to continue upside structure. I will continue to look for opportunities to buy weakness in this market. We're opening out of balance. We're opening out of range. We're opening it up.
Oh yeah, got construction going on, have a lot of animals. My cat actually died. So that was part of what I was dealing with this morning. You can see your pop on your Tesla. You can see where we're located now on the bounce. Looking for the 57.20. Not looking to sell yourself too short. This is where we're looking for the 72. Would have been the return to the break at the level. The more logical is 55 to 56, but we're just looking to close off on that 20 to see if we could get a 30.1-to-1 TP, and just be careful on what we trade in today. No big rush to do anything. You can see why I want to take the 20 still. Didn't see the clean move here, that breakthrough. It could have easily fallen through and come down to the secondary. Well, that would be tertiary level there. So you want to see this 15 to 20 clear by London close. By London close. The ES on the other hand is going to provide a lot of stress today because we are already in the sell. With the sell, you can see how we actually came down, hit the active POC and bounced to the top side. This is providing a lot of risk in the market. I'm gonna actually lean off of one of the contracts at break even. So I'm not gonna post this. Lean off one of the contract at break even. I'm not too fond of getting hit for anything big today. And by this point I don't have anything banked as profit today. Positions, right? You see short, don't have any realized PNL. Trying to see if we could get to that realized PNL of 300. Back long, average buy price. Now this is where margin will become important. You see what is your margin requirement for two contracts and what is your maintenance margin you need. So that's why trading not full contracts. Yes, minis are that much more expensive now. So that's why this is a risky move. How we're gonna deal with this now is go to deviation, look to see where full deviation is and where's the only sort of point we'll be selling today. Make sure that this number is filled well. F2 that F2 that's also be this. Oh. $52.6. You can see why we were selling 56. Yeah. So we had one overnight on that. But will hopefully be out of that. We'll take the test of the low if we do get that, and our next entry was 56, so 52.6, 52.5. Build the extension kill zone on that. You can see we just hit the 15 right there on that node. Want to make sure we can break through that node. Or if you still have your two contracts holding, this is your identified area here. This is where you want to be out. Leaning on the 57 now as the push to the upside. This is your actual exit. Dum, 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 dum. 52.5. Right, so now we're looking at, where is this? Just come back, kill that. Right. This will be my zone most likely, unless something very crazy happens. Building a white zone here with the middle point. It's a white zone. You can see a lot more volume got pumped in and no particular reaction there. Anything over 2,000 contracts in 5 minutes. You don't see it. That means you have locked in somebody building a position in one way or the other. That picking up the liquidity actually sitting up here this morning. You have liquidity at 38 and 40. If you want to see that, go to why are you telling me what I'm doing? Nope, wrong one. Where is FT? Hopefully I would get, well, I don't think I get strike. Right. So what we're doing is, alright, see this 2 areas here. Right, yeah.
Order filled.
Right, got one of my stuff to close. That is my ESL single, so right now is on a single contract, and I'm trying to see if I can get this to fill 15 there. You're leaning on the 57s to go for the upside. This is your actual exit. Roll your stops here. 3 points beyond. Still have time. Don't want to lose my pants today. Don't want to hold on to a winner. Alright, so I was talking about. Now FT is one of the best I ever seen in my life. Learned quite a lot from him. We were talking about bookmap. This is a picture of bookmap with liquidity, and these were some of what I will be looking at live. You can see FT have full depth on the market. I'm using Rhythmic. You can see we're 40s, 41s. There I have my stop at 42, which ties in. And you can see the initial 35 started dry up, and you can see liquidity right there at 30s. I mean 35s, right? So you can see 38 to 41. That is your liquidity kill zone. That's why you see hit bounce the attraction here. So we are sucking the liquidity. So that is one way. Let's look at the market. Make sure that we don't have any news that monster killed us this morning. Nope. Right. Just want to see if we can reach back to that level. This is what a technical trade looks like. A better trade technically. Know exactly where you're looking for, where you want to escape, what you want to do with this trade. So if you're still sitting on 2, one exit is at 57.20. Roll your stops, you know, why we use 58 as we stop, and we identify the node. Right there was the middle of the node. This is the kickoff area if you're looking and you want to hold for long term. I saw a lot of heat this morning, so don't want to be there. You can see where that little bar is at 20 to 23. That's why TP1s would be very valuable to Elvis. So, doom 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 doom. Right, now looking for potentials. Potential. Use your potential though as your fib. Potential return.
Order filled.
Right, got filled on my 20, suppose. Bingo! Don't want to be here anymore. Wow, bang, some profit finally for the morning back. Doom 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 doom. Yeah, that was for that. Take my marble and go. Don't need that. This is my logical outside here. So this is not so this trade could actually be a lot of profit based on what the reaction is, right? So the reason I closed this trade is you can see this spike here, that particular gap which appeared here if you look at 1 minute candle. Right, now this is where trading and traded small and smart. You can see right there, this buy a signal buy there if you're on the low side. Always will be a signal buy. I got out right of one eye contract at break even because I didn't like what I was seeing. This is your logical exit here. Now you see where you'll be in trouble here now is trying to locate buy. What overpressing is not a good idea at all in the market. Always measure your risk, because totally I had 4 contracts just now which had a lot of risk, and now I am minimum risk, looking for an next small $300 profit. You can see where we got out of this because of the risk factors in the market. Once it's not clean, don't want to be there. If it was clean, yeah, sit in it. Once it's not clean, hell no. And you can see why this was the logic trade right here. Let's move that bit. No, sorry, no. Why you do that? Oh, that is because I touched this. And always make sure you're locked on the high and low. Usually I have my snap stuff on. I just check my live account. Hold on. took my marbles, ran away home. So we'll do the last snap on it. Logically, if you're looking for, well, you'll be needing to use continuation cells. You know, oops, see, that's what's happening because I did not lock it. Lock it. Right, so that's locked, I think. Yeah, that's locked now. See why we got the in. Nice and low. Lock that in. Now we're looking for where the potential retracement might go. We just went to 50-50. Here I go this one high. Look for that. Nice motion logical trade. Assuming the low is there. Looking for a 618. Say 618. And you could build your kill zone right there. Doing that, put that there. This is your kill zone here. Equal measure move. 618 retracement. Pick up for the actual node. Right. And it is 58. Oh, I wasn't looking at it on the other side. You have two logical points here, so logical point 1, logical 2, 5760s might be of value. Breakout point. Right. Two areas you'll be looking at, assuming this is the low here. I take my marbles and run away home, so don't need a lot of stress today from that. So that is one kill zone. Let me update my kill zones. 65 to 75 and use 70 years. We would not be rebuying at 90 for anything. We'll be rebuying at 53 if the extension comes. Either way, we're looking to sell the 70s or buy 53s. So if you're looking for the next kick, this kick will be over here, the 161. So you know you want to sell 70s here, and we have this 52s. Go back, see that it is next secondary location node. If it does reach there on the push down, like the extension, like the secondary extension node, close off this trade. I'm looking for this trade now. So we have 61 to 49. So if you do get a continuation, which is very unlikely, right? So Don't want to make this too big. Is 50 the exact number you don't take it, you know, at 52 is the number. Right, points build right here, only take singles. Oh, come on, give me a 6 point. A lot of construction going on that side. Come on, beats. And we know if we get the breakthrough, we're looking for right here, 26 as the buy. Give me my 6 point by London close. Ooh, I'm a live stream to go and watch. It's London goes. Not bad. Right, I'll go take that.
Order filled.
I just got filled here. Thank you very much. I'll take my money and leave. Right, so what you're looking for is if you get the run through, you're looking for that 26 area to provide some support. Make sure small enough just for you guys. So I know exactly why we buying there. This little boy. Right there. 25 to 26. Know where the protection is at 21. If it does fall through. I'm not buying at 30, but it is potential where that is in case of what we call being trapped. So we're looking at London close here and see if the order volume actually let goes from where it is now. We're using 2 contracts on the buy side, and that is because we are on an uptrend. You can see where we have stops located beyond the overnight low. 25.5 is the entry that is built off of value area from yesterday. Make sure that you can get that. Everything right. Don't like that dead zone. Right. So need about 600. Not too shabby for the morning. I had 2 singles if you're trading singles. safe. Wait, then having a single sitting here. This is a single contract will be sitting here if ES drops, or you might you might get that inflection back to the downside. No, this is why, particularly why I always like to be trading up front. If it does push through and stop me, push through and stop me, because trading those 2 points now, that could be either a continuation point from the 30 to the downside, and you will get flushed out looking for the retest and then the bounce to the upside. So now looking to get it to 90. If you do get flushed, you get flushed. Alright, so I have a single looking to buy at 50. 2. Looking for, I might actually go at 50. Looking for 1 to 1, 25 ticks. Actually, could actually go to 20 ticks on this one. So now the risk is, don't want this trade, although I know that is where support is. Don't want that at this point. Want to see where London goes, not being in a rush. Right, so you can see where we want to buy it, why we want to buy it, and how we gonna attempt to buy that. So you can end up at 26 will be my actual end. Let me just make sure. Nope, be 25.5 to get my risk management correct. You can see with the secondary sitting at the actual point of control now. If it does get trapped, I don't want to be involved today, and we have location set if it does break out. Oh, look, watch. That is why not being greedy. Don't want to be greedy. Take no marbles and run away home. Run home. I'm have to get this to go side by side and see what crops doing on the market. Notice anything? There's a very recent correlation. Don't know why it's correlating. Bam, 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 bam. Right. So here is the play we're looking at here. If we had 56.90 at London close, one single contract buy, looking for 150 point victory and a short stop, very short stop, 90, but we have to be able to get it at 80 to 90 with 10 to 15 points of risk on a single contract. Nothing against buying 90s now, but not for me. Just want to see what that does bring. You can see here we're gonna close 23 minutes. You can see why you're looking to enter there. One big extension there. Once we want to see market reaction there, if it creates a new low by 12.55, and my be 11.55. You know, guys, right? These those guys. Seeing the correlation also have my sitting on pause. Alright, you can see contracts building. Nope, but what the hell? Alright, you can see how much contracts building there. Anything more than 2,000. Yeah, sellers coming into the market. This is 2. Should be back at 1 now. I'll always keep that at 1. You want to see if we see any struggle here for the run now close. Start to peel off the market. Would have had a winning position on the longer side trade, but see what. Alright, want to see if we can knock it up here. 1 run now close. That market could have go anywhere because we are testing all time high, so have no qualms about that. If it was the lower range, that was double contract hold. It didn't really care if we got pushed out of that trade or not. So the reason I have it sitting at 25.5 is because of my risk factor and my risk limiter. 26 is valid in the context of the trade. This is 26 here. Right, you can see big door move, delta sat at 2700, so we'll hold off on that for a while. Bam, 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 bam. Still have 20 minutes for that to fill. Move its way around. Use 21.5 as my breaker. Right, you see enough support here for this, so you want to get as low as possible. You want to make sure that follow profile right here. You go from below to high swing to low swing. What is it? Right. This is where being very careful may get you a very good order on the order book. Like 72 is below 73. I take 20 years to do. Bam, bam. Right, initiate buy order. limit order is only, where is it, at 90, even 25 pips. We stop loss, looking to get filled to the upside. 1-to-1
Order
trade,
filled.
right, filled on it. Right, now using here as support, here as the breakout point, just looking to pull this 15 now for 25 points, 1-to-1 trade on London close. Here's looking for that quick response of a we identified area back in at 90. We can see bounce, body, hit, volume in, volume out. You can see how the delta was declining. Look for that, and it give you a preference for the upside. And now we have point of control backing up the trade. We are looking for a 25 point 1-to-1 trade, 25 ticks. If you do get 20 ticks off, right, based on what the volume value here is. So this is what we call micro compositing, trying to see exactly what's going on in the market. We know we had liquidity in the area. We want to see if we could get that to give us a bounce to the upside. You know, we have value area low, push, we have high volume. So you know what, if it does break out, we are 25 points at risk on the market. You want it could go up to 20 points at risk. Don't really like trading like that on oil especially. And we got 25. Doom, 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 doom. Oh, I need to go and check and see if I have my shit set up for this relief trade. Oh lord, hang on, I got my
More fulsome update on potential in the April NPR. At the same time, household financial vulnerabilities remain elevated, although we will be analyzing the positive implications of a higher household savings rate for those vulnerabilities. Tout bien considéré, le conseil de direction était d'avis que la résultante des risques ne justifie pas une baisse des taux d'intérêt à l'heure actuelle. Pour arriver à cette conclusion, nous avons sous-pesé deux risques. Le risque que l'inflation soit en dessous de la cible et le risque qu'une trajectoire plus basse des taux augmente les vulnérabilités financières, ce qui pourrait rendre la cible d'inflation encore plus difficile à atteindre à long terme.